I'm going to now invite all of the speakers to join me on the podium. So we will start a Q&A session. We will be taking questions both from the audience as well as from the online audience. So please do raise your hand if you have questions. But let me welcome you all to the podium first. Okay, thank you. So why don't we start, let's start with where Berber really laid out the state of the evidence for us. And so one question is really, Berber, you presented a pretty mixed view of where there is evidence that is strong and where we still have some clear gaps in our learning. I want to focus our attention to where the evidence is stronger. And I'd love to hear from you where you think there has been uptake in this use of evidence. And I'm interested in hearing from our other panelists as well in terms of the use of evidence. Where do you see the uptake, and where you don't see it, what do you think is behind that?
Okay, so thank you. So the question is, where do we see uptake of the evidence? Where do we see the evidence being used and put to practice? So I think in the area of insurance, we see a lot more realization now that when we have weather index insurance products, that there's a lot of basis risk, that this is really hampering the welfare impacts of these products, and that for farmers it can be worse to buy a product that has high basis risk than to buy no insurance at all. That often these products might actually be lotteries for farmers, and if you're on a poverty line, it doesn't make sense to gamble on an insurance product that isn't going to give you a payout when you really need that payout. And I think that has been really taken up by the community. We see a lot of insurance providers, governments, practitioners in this field. We really see them paying attention to the question, okay, we want to make sure that we design our products with minimum basis risk. I also think that in the area of savings, the findings around labeling, account liquidity being important, but people having a need for commitment, these are factors that are being considered in the design. It's just that we haven't found, I think, the right balance on how to where to draw that line. So how much commitment and in which context and which market segment needs more commitment or harder commitments, and in which segment does it better of the market does it better work if you're using softer commitments and labeling types of interventions in order to encourage savings behavior. So those are a couple of thoughts on where we see evidence uptake and not.
So I can speak a bit to kind of the donor community, because that's who CGAP mostly represents in the financial inclusion space. And I would say the donor community is very interested in the evidence, but have difficulty using it for many reasons. One is they don't have the time to spend and understand it all and learn it all, and therefore they need intermediaries that can help them distill the key lessons. And then also, how does that come to play in terms of their investment instruments? So donors don't, the way they work, they have a set of instruments, whether it's a grant, whether it's a loan to a government, or whether it's an investment instrument, or so on. And so you have to adapt the learning and the lessons for them to be able to use that information. So that's one. The other one is, what we hear a lot is that they are finding that it's confusing. Like, there's just a lot of different information out there. There's a lot of little studies, and they don't know what it means. They don't know what it means and what are the implications for them. So they need someone to help them do this. And this is why I think this kind of event, where you're bringing different stakeholders all working towards a similar agenda, to come together and say, well, what are our key messages? What do we want donors to do? But then we have to take it and take it further. We then have to interact with them in the way that they need, develop materials in the way that they need. They don't read research papers. I mean, I can tell you that. I think that the policymakers are also key stakeholders in this world. However, a lot of policymakers who are dealing with poverty issues rely on development organizations to support them. And so here, your intermediary, the way you're going to get to the policymaker is through the right stakeholder groups, the right development organizations of the World Bank, for example, like you can talk a little bit about that, the UN agencies, some of the others that are supporting governments to put in place these systems. And so that is your channel of influence, as opposed to necessarily one-on-one with every single policymaker.
So maybe from a field perspective, if it's difficult to read a research paper in a donor capital, it's even more difficult to read that kind of in the field and in the midst of some of the operations that are being implemented. So I would say that kind of for the evidence or the research, one of the key challenges is how to align the objectives of the research with the objectives of the program, no? And there's there are different processes, different timelines. So how to incorporate that in a realistic manner is a challenge. But of course, kind of making that evidence available in a very digestible manner to colleagues in the field is essential. And then therefore the need to adapt the program guidance and to have consultations in the field that take the latest to colleagues on the ground.
Yeah, just to add to that, I would say that from one perspective, I think that not all of the evidence is transferable to all contexts. So we have kind of a big picture of sort of what works, what doesn't. But when we actually try to take certain models forward and try to move things from one context to another, it doesn't always work. And so I think field teams really have to then start to figure out what are the nuts and bolts of making, this particular product or this particular approach work in another context. One example is from Indonesia, where we were gung-ho about supporting sort of a liquidity fund that microfinance institutions could access so they didn't kind of, run down their liquidity post-disaster. And the regulatory environment just didn't permit it, even though we had, supportive evidence that this kind of thing was necessary and would work from other contexts. So I think that's one challenge. I think also that the evidence sits sort of one level above field practitioners, and sometimes, again, they're struggling to really understand what are the models and approaches that really, what does this really look like on the ground? And the more sophisticated the models are, if we're talking about certain types of insurance products, where there's also a lot of kind of behavioral barriers, it becomes more challenging. Where it becomes easier, if, for example, we say, okay, take your traditional savings group model and think about how to tweak that so that you're actually supporting more disaster-specific savings products, or you're promoting a culture of emergency savings. I think that's easier to get for field teams to kind of get their heads around. So those would be my reflections.
And Olga, you presented, the resilience framework that Mercy Corps uses does have a pretty heavy emphasis on the market component as well. And I think to Maida's earlier point, it does, it helps to balance or rebalance this emphasis that can be placed on the individual in terms of them securing their own resilience. Can you talk a little bit, and I open this up to you all, can you talk a little bit about how, what can be done, in your view, Mercy Corps is obviously implementing directly, but what else could be done to try and increase or encourage the efforts of the private sector or the government, or, in creating that enabling environment so that people can be more resilient?
Yeah, I definitely think the private sector has a critical role to this, and I think it's similar to households. It depends really on the risk environment, and if they think that the environment is too risky, they simply won't kind of move in the right direction. What we've seen really effective in catalyzing this kind of risk-reducing investments in Ethiopia is really blended finance models, and that seems to be a critical area that is able to nudge industries in the right direction that actually also support household resilience to various shocks. And I think we'd be very interested also in exploring that, as a research topic in terms of to what extent these blended finance models support risk reduction.
Yeah, one of the key things I think it's important when we're talking about financial systems or financial instruments is that a huge amount of what can be done in terms of private sector engagement or innovation is contingent on the regulatory space. So it is very different than when we're dealing with just humanitarian assistance. And so the role of financial sector reform and the enabling environment is critical. The role of digital payment ecosystems in the market is critical. And so that does not happen through humanitarian organizations. It does not happen through the UN. It does not happen. It requires a longer-term investment in the financial system. And institutions like the World Bank play a critical role because they lend to governments that are doing payment system reform, credit market reform, and enabling regulation reform. And all of this is needed for innovation. So it's very, very hard to ask the private sector to walk into markets where there is not an enabling environment or where there is not a digital payment ecosystem in place. And so that's just one of the things that those of us who work kind of on the ground with the poor have to recognize, that there's no amount of evidence that's going to change the situation or that are going to incentivize a private institution, a private provider, to enter a market if these things are not there. And so that requires that we engage then with the actors that are influencing government policy, that are putting in place payment systems. And these require very large sums of money and they require a lot of time as well.
Yeah, actually, if you don't mind me adding to that, so the model that I mentioned in Ethiopia, there was a huge regulatory hurdle to get over at that time when we were trying to introduce the first kind of mobile money system in the country. And the external service provider was not allowed to partner with the bank in a valuable way because of the regulatory environment, and it stalled the whole intervention for a long time. So it did take kind of a lot of ongoing advocacy, a lot of partnership with government, and as I mentioned, multiple forms of capital ultimately to stimulate that. So
maybe also to add from the WFP perspective, because sometimes people think, well, now WFP is into the insurance business, and we are not. But what we are trying to do is to work with the private sector so they develop products for our target group, which are the most vulnerable people in the most difficult context, and we are helping our target group access these products. So, and with this we can leverage our long-standing relationships with governments for them to understand that this is something that they need to allow to grow and also our institutional capital with the private sector, no? And it's this combination of public-private partnerships that can help scale up these kind of initiatives.
Great, thank you. So we'll move to questions from the floor now, and also if there are any questions online, Lucy, just let me know. Great, okay. Are there mics going around? Or?
Yes, there'll be mics going around.
Yeah. Thank you, Tom Timberg, consultant. First place, thank you both to IFPRI and for the speaker. Can everybody hear me? IFPRI and the speakers for a very informative session. But I was rather disturbed by a theoretical problem. It's like the joke goes, it works very well in practice, but will it work in theory? Financial transactions have to do with financial transactions have to do with different payments to different people over time with risk connected with whether those payments will occur or not. Formally, and this was I think a good progress in what you're doing, they could be in the form of insurance, they could be in the form of loans, they could be in the form of rentals and sales, and that's what I was really disturbed by, which is there's been a lot of argument. I have no idea. Well, I do. There's some empirical studies, not as many as I should, about the use of futures transactions and purchase contracts by agricultural, agribusinesses and so forth as a device for risk reduction. So I do think that in terms of channels, you really, and the thing that really brings it home is if you look at the Islamic finance world, U.S. courts have had to deal with financial phenomena, and what they essentially say is, it's all loans. You may call it rental, you may call it insurance, whatever you call, we may call it a sale, but from a substantive point of view, it's like a loan. In any case, what I was suggesting is I think you need to extend your concern to look to future and delayed purchase arrangements. Thank you.
Great. Let's take a couple more questions. We'll group the questions, and so please take, notes on your responses.
Hi, thanks to the panel, very interesting. My question, well, it's been like 45 minutes and we haven't talked about blockchain and or AI, so I'm joking. But I actually did want us to discuss what do you think that the role of certain emerging technology, because it's definitely going to allow, or it's already allowing for a lot of lean prototypes to be developed, which when Mayera was discussing, for example, the private sector is not going to go in. We do know that there's a lot of huge insurance companies that are looking for how they can actually work with startups that are really just trying to find their own window of opportunity. And developing countries do tend to be an opportunity, and now there's a whole lot of back and forth that goes in there, but the fact is that there is. And emerging technology does allow for an opportunity to pilot a lot of things in a lean way. Actually, I know that the World Food Program, and I know this because I was there, has an accelerator, and they have been doing a whole lot of prototyping, working on new business models and how they can get credit for farmers and things like that. So, yeah, just something to put out there for discussions as to how do you think that it is good, or if you can discuss specific examples, even better.
Great. Let's take one question from online as well.
Okay, this question is from Marc Senin, a CSA Fellow at the Sustainability Research Institute from the University of Leeds in the UK. Regarding Jordi Renau's presentation, will you please elaborate a little more on the selection criteria of smallholder farmers' participation to the R4 scheme in any of his case study countries?
Great. Why don't we start there, Jordi, if that's all right, and then we can start from that specific question and then open it up to all of the panelists for the other two questions.
So the selection criteria has to do with kind of these are the WFP beneficiaries in areas where we've been operating over time. Sometimes people ask us, well, if we don't have the 4 Rs, what happens? Is it R3, or if we add something else, is it R5? So what we try to do is kind of when we are trying to move towards more innovative programming, we see what are the gaps in that specific context, and we try to provide an integrated package for our beneficiaries to benefit from this. So beyond the usual seasonal transfers, we see what are the opportunities for disaster risk reduction activities, and then we add from there. But it's usually WFP beneficiaries in the areas where we can deploy weather-based insurance.
Great. Okay, Elga, go ahead.
Yeah, I think it's a really important and critical point that you made, because I think emerging technology will really revolutionize how we work in this space. And I would highlight 2 examples that I think are kind of at the frontier of this. One is that, through technology, not only is it kind of our cash flows through mobile wallets and all of that easier, but there's an opportunity to connect multiple types of information that can really nudge certain behavioral changes. For example, from an AgriFin, there's a program called AgriFin that we're running across 3 countries in Africa, which really connects not only people digitally to financial services, but also supports, for example, access to weather and climate information, access to agricultural information, market information kind of all in one place. And so all of a sudden people have access to a range of critical decision-making tools that can help inform more kind of risk-reducing behavior around their various practices. Another space where I think this will start to become completely transformational is actually in sort of crisis contexts where currently already cash transfers are very much being digitized, but through blockchain technology, for example, the intermediary may entirely be taken out. And so I think that's critical also to think about how do we start intervening in this space to promote more resilient behavior in crisis contexts through cash transfers.
Yeah, so let me also add to the technology issue. So one of the things that we at SIGAP care a lot about is, I mean, we are a huge proponent of use of technology for getting financial services out to poor people, but it's also very important to understand the risks that those technologies have. And so I just want to put it out there. On blockchain, we've done an analysis of what are the applications that are relevant for poor people, and we actually can't find that many that are specific to the financial inclusion space for poor people. However, it's just something to continue to look at and explore. In terms of AI, I do think it's already being used by lots of different companies. For example, in China and with Alipay and so on, it is being used by certain providers. How can it be picked up by others and so on? One of the things to note is that a lot of governments are very careful around what they allow and what they don't allow because of the risk issue I just mentioned. And one of the things that we're tracking is how governments are testing some of these innovations in different markets in a safer way. And so there's a trend these days of creating these sandboxes, so regulatory sandboxes where they're allowing providers to test certain technologies, but in a confined space with a small set of users so that the risks don't have systemic effects on the financial system, right? So that's a new thing, and a lot of countries are doing that. So I think we see that as a positive. But eventually you still need regulation to allow some of the providers to actually use some of the emerging technology. I just want to mention one other thing on your question on the purchase contracts and rentals and so on. So I think from at least from the SIGAP perspective, so we actually had a dedicated research program on Islamic finance for several years. And one of the things that we found is that it's very hard to translate those mechanisms for the poor. So they are very effective at larger levels of finance. They are very, very hard to make sustainable and viable at the poor level. So other than the very simple murabaha, which is just a add to the purchase price, and that's the only thing that seems to work at the micro level. So I just wanted to put that out there. From an evidence perspective, there's very little evidence, and that's why we don't include it in a lot of our kind of synthesis or reflection on what works, because there's very little rigorous evidence on those products on the lives of the poor.
Yeah, and thanks. I wanted to comment on that as well, and I think you, Mayada, already kind of made a really good point in that there is very little evidence, and I think it's definitely something that we could kind of put out there as this is actually a research priority. The review is focusing not just on agriculture, which is why it wasn't as salient in the review itself, but I think moving forward, it's if we're focused more on agricultural risks and value chains, and it's definitely something to keep in mind.
Great. I'll ask one more question, then we'll take another round from the floor. So one of the things I think that is key in all of this is just remembering the specific shock, so the resilience to what. And we've talked a little bit about different examples here, but I'm wondering both from an evidence perspective and from from the implication perspective then, in terms of what you do and what you focus on. How are you considering those different, the different evidence as it relates to a shock that may involve a household level health shock versus crisis or climate related shocks? How is that showing up in terms of the evidence that you're looking at for financial inclusion, and what might we take away from that?
Perhaps I could start quickly on that one. From the evidence side, we actually have quite a bit of evidence that is showing how households respond to health shocks, because these are idiosyncratic. And so in just the way that we collect the data, we get a lot more observations of households that experience health shocks and the need to cope with those. We have a lot less evidence on how different financial products help, at least rigorous evidence, how these different financial products can help households cope with the big covariate, more catastrophic, really big weather events, for instance, a large-scale drought, just because the way that we have variation in our data just allows us to say much less rigorous and good quality evidence, so that we can really attribute differences between households exposed to the shock and not exposed to the shock, and differences between households with and without the financial services. It's much harder to attribute those differences to the financial products themselves, just because of the way that the data is collected. And so what definitely I think could be a good investment priority is to say, okay, we need to invest much more in data collection, so that there are long-term panels, ideally targeting the same households over a longer period of time, so that there's just more data on, and also that these data include measures of financial inclusion, which is currently we have the agricultural surveys, but they don't necessarily collect the financial side of the story. They may collect the resilience side of the story if we're lucky. So it's a data constraint, and I think that's why we know less about that sphere. On the side of the investments, I think we know a lot about how investments are being changed by the introduction of those financial products, just because that is something that happens also in the absence of observing the shock. So the nature of the data is kind of important in how we think about what evidence is already out there and what kind of evidence do we need to focus on moving forward.
Okay. Yeah, it's an important question, an interesting one. I'll try to speak. I actually think that a lot of the data that kind of we've been looking at in some of the studies we've been involved in look actually at the opposite, at the covariate shocks and how some of the interventions around financial inclusion support kind of resilience in the face of these covariate shocks. But I take your point on sort of the attribution is sometimes critical, so it's not always super linear. Maybe speaking to the practice side of things, I think that it's critical to really, when working at a community around these issues, look at kind of holistic risk awareness and really build in an understanding of risk at a household level, in addition to kind of the things that might affect a community. And one of the things that we see promote different behavior change around financial services at a household level comes down to actually, a lot of it has to do with gender norms and household decision structures. And so part of the package really needs to be how do we shift an understanding of who makes decisions in the household to make certain types of investments at a household level with financial products and with savings, who ultimately controls that. And we've started doing some work around building and dialogue around this as part of sort of financial inclusion work that we're doing on the ground with various savings groups. Yeah, so I'll stop there.
No, I just want to add and build on what I said earlier, which is, the resetting of the expectations. So I do think kind of larger disasters, I do think we need to reset our expectations about what household finance can do. And I do think that this is where we need to be looking at other types of risk reduction at the community level, at the higher levels of government, and where safety nets and other things come into play. I think it's unrealistic to expect poor people who are hit with massive disasters to kind of recover themselves. So I just feel like, and this is where we need to be realistic about what financial inclusion can do. It can contribute, but it certainly will not be the solution in that context.
Yeah, maybe to complement this as well, I think it's totally critical to have this risk layering approach at the macro level and at the micro level as well. For example, WFP in Africa works very closely with the Africa Risk Capacity, which is sovereign institution of the African Union that insurance countries at the macro level, and then we complement that in the countries where there's overlap. And then at the programmatic level, just to understand, as the R4 does, how the different interventions complement each other.
Great, thank you. Okay, Lucy, do we have more questions online? Okay, great. So let's start. Let's take 1, 2, 3. So one at the back, and then 2. We'll take all 4 hands that are up right now.
Hi. 20 years ago, I used to be a donor, as some people in this room might remember. But working through another World Bank secretariat, CGIAR, which is no longer there, I guess. But I guess I have 2 quick reactions. One is very, very positive. I think for agriculture, which is the world I come, this is a more exciting way to penetrate some of the issues than the climate-smart agriculture world that I live in, which is with other UN agencies and other players. So yes, we have what we used to call a stovepiping problem. It's called a siloing problem. You know, there are not a lot of agriculture people here, and yet I think these are answers for agriculture, more so than I hear in the other world that I live in, which is the link between carbon finance, climate-smart agriculture, decision support systems, which gazillion dollars have been spent on through the coordination of the other secretariat I mentioned. So, you know, we have to reach back and see how, with or without blockchain or whatever, how that can be linked and how there can be more climate-smart agriculture people on panels like this, because there are 2 sources of capital. I used to be an anthropologist for the farmers I lived with and studied with, working for a CG center, that got mentioned. One of them got mentioned here, which is livestock. Livestock is the rural banking system for particularly vulnerable populations. And you will see people getting on the World Food Program are right there, and then you penetrate and you don't do a survey, you live with them, you find out they have 100 cattle 100 kilometers away, and nobody knows about it, and that's the way they want it to be. Nobody knows. And over half of them are often owned by women, and nobody knows about that either. But if you don't spend several months there, you never find that out. The second thing, which I didn't hear mentioned, but I was late, was land tenure, or land as capital. You know, this riverbank, the soil, the soil organic matter. You know, again, that you tend to want to keep that off the radar too, because if your land is considered particularly valuable, suddenly someone, El Haji, may show up with title to your land if you improve it too much. And of course, there's another part of the World Bank that's trying to solve that problem. So these 3 things come together, but I just want to say is this is probably a place to start bringing these things together. But my question is, I mean, I know IFPRI works across these silos. Yeah, IFPRI, but I'm wondering,
to wrap up.
I'm wondering, my question is then for R4 and for AgFin at Mercy Corps, how much are they back in to the decision support systems in the agriculture or to the land tenure dialogue? These are parallel processes, it would seem to be. If a donor, I would want to push your institutions in that direction.
Great, thank you. Okay, let's take the 3 questions that we had near the front here. So the gentleman here.
Hi. Implicit in the question of knowledge gaps is a certain assumption about how we do research, and the problem of external validity, the costs of doing research are pretty well known. So I was wondering if the community has developed some sense of, are we not discovering stories because we are very rigid about the things that we want to answer, about how we investigate, and like how we have regulatory sandboxes, is it time for research sandboxes to let down our guard and maybe look at stories the standards of economics don't allow us to see right now?
Hi, thanks everyone. My question touches a little bit on what Olga alluded to, but I was curious. I think this is for maybe Berber and Mayada, but around the intra-household dynamics, we know that males and females and people of different ages experience shocks differently. And so I was curious about what the research is showing and what the recommendations would be, especially for women. I'm a Women's Economic Empowerment Advisor at World Vision, so I was curious about what the research was showing you and recommendations in that regard.
Hi, thank you. Andrew Bracken, Feed the Future Partnering for Innovation. In our latest funding round, we invested in a insurance provider that's providing index-based livestock insurance bundled with an app to help the herders find feed and water. I was wondering if you had any experience of bundling to commercial products with insurance products or other financial products, and what you found in that space.
Okay, why don't we, Berber, do you want to kick us off? And then.
So on the evidence regarding bundling of commercial services with insurance, I think there's a growing body now, so a lot of research is in the field, including some of the work that we're doing. Not a full story yet. I think one of the interesting stories that I've heard coming from one of these trials that colleagues of mine were doing is that farmers had more trust in seeds because the seeds were linked up with insurance. And so they were like, oh, if my seed doesn't grow, if this is a fake seed, then at least I will get back. And so this is kind of a certification from the seed company that this is a good brand. But that's all stories from the field, which might be alluding to the question on, okay, are we being too rigorous in what we allow to be evidence or not? I think these are interesting stories that help us build hypotheses and that we can then go on and test. And so in a project that we're doing, in which we're linking seeds with insurance, we're actually going to test this hypothesis. Is there an effect because it is improving trust? Is it actually the certification through which the demand for these varieties improves when we're bundling with insurance? On the intra-household dynamics, there are studies out there. I think a lot of the story still kind of needs to evolve. Maybe Mayada can also say more on that. One of the things that I've seen is that the tools that we have, for instance, the Women's Empowerment in Agriculture Index, it doesn't have questions specifically around resilience, and so I'd be really interested in thinking about how can we extend those types of tools that we see being fielded in a lot of different places now to focus more on how households and how the intra-household dynamics play out when we are talking about resilience instead of more general agriculture decision making.
Okay, I'll just say a couple words. So I know IPA has a great synthesis paper on empowerment, and that does talk a lot about some of the household dynamics, the research that's emerging in that space. So I would refer you to that. We're also doing a lit review and looking at this, and but not looking at the resilience angle, more on, and what you do find is that having payments go directly into women's accounts, having privacy issues, if all that is taken into account, it is better for women. You do see more impact. So that's a very, very simplistic kind of synthesis of what we know. My guess is it would be the same in kind of a shock environment, but I don't know because none of the studies that I've seen deal with that. In terms of the knowledge gaps, I mean, so CGAP does not exclusively, as you know, focus on RCTs. Like we do look at a lot of different kinds of evidence and research, and we do think a lot of it is important in advocacy, in influencing, and so it's around using certain types of evidence for different purposes. So we do a lot of work with providers that is around business models, that is around trying to understand how you can scale some of these things, some of the things that are good for poor people, how do you scale them? And then that's very important, and that is not RCTs, and that is not rigorous. That is just working directly with the provider. And I think all those kinds of research are required if we want to see change happen. But you do need rigorous research, like what I said earlier. You do need it because we also need to make the case for why public subsidy should stay into this space. And I do think that donors and others who are putting up money should demand a level of rigor.
Great. Olga and Jordi, do you want to touch, I'm thinking about the questions on links with climate smart agriculture and the land tenure questions that were raised at the beginning.
Sure, and maybe I'll just pick up bundling really
course,
quickly,
yeah.
and then go back to that question. So I think, and I know this is sort of a cop-out, but on the bundling, I do think it's really context-specific, and to what extent households perceive the immediacy of the risk that they're facing, and to what extent they trust the payment. So we've seen very different examples of bundling working and not working. In Indonesia, it hasn't worked because it was designed around kind of low frequency but high risk events like volcanoes and earthquakes, and people are like, well, I'd rather just have a more flexible savings account. And that was a very clear kind of message from that particular area. Whereas, for example, in Nepal, where it was linked to livestock, and it was sort of easier to track, people trusted the mechanisms because they were linked to their local cooperatives, we saw that it functioned really well. So I think those are kind of some of the broader factors to consider. On the climate smart agriculture, I think I'd actually maybe want to also tie it back to the point that you were making around kind of covariate shocks and sort of who holds the risk and who supports poor people to sort of recover from shocks. I mean, I definitely think that we're looking at these financial services as embedded in a wider support system that helps people manage risk and that wider enabling environment. And that includes the market system and how it supports households to manage risk, that market, how it supports investment in climate smart agriculture, and then also the public sector and what's the role of the public sector in that. I think there are ways, to look at how financial inclusion or how financial services operate at multiple levels. So we talked a lot about the household level, but the program that I was talking about in Ethiopia actually catalyzed traders they were able to access more credit and offtake livestock from poor households in a timely way because they had more credit. They were able to make the immediate payments to those households. They were able to take the offtake livestock earlier on in the drought cycle. The household could benefit from those sales and use that to help them manage risk, but with support of the broader market system and the financial services that supported the wider market system. When we're talking about livestock, we are talking about agriculture, we're talking about drought, we're talking about kind of climate smart ways of doing this. So I think the conversation definitely ties back to those effects of how do we use financial services and financial institutions at multiple levels, different types of products and systems at multiple levels, to ultimately have a viable agricultural model that then helps household manage risk locally. I won't
Great.
keep talking because I could talk about that example as well.
Yeah. Okay, so Jordi, with 30 seconds.
WFP has a dual mandate, both kind of development and humanitarian, but usually our interlocutors in the government are humanitarian affairs or social welfare. So that's why I think kind of partnering with other development actors is critical to have an integrated approach to addressing some of the challenges that we need to address if we want to address the root causes.
Great. Okay. And so with 12 seconds on the clock, we're doing well. So I would have loved, my last question was going to be ask for a request for recommendations on what to prioritize going forward, but maybe we can follow up and hear that from the panelists. So I wanted to thank IFPRI for hosting this event and providing their beautiful space. Thank you to the authors of the paper, and I really encourage you both in the room to pick up a hard copy, and if you're online, then to visit the IFPRI or IPA websites to get that. And then obviously thank you to all of you for your time and active participation, and to our panelists for sharing their brilliance with us. So thank you, and we'll see you soon.